Trade wars, tariffs, and disruptions. What's up, everybody? Welcome aboard to Bubba's Bottom Line, and Todd Bubba Horwitz with you. And of course, last week the talk was about the trade wars, about the tariffs, and about everything else that was going on. And of course, we seemed to miss sight of that the markets were having a middle of the week rip your face off rally, and which eventually failed on Friday. But I think as we look back, and we had two big announcements. I think it was one on Tuesday night into Wednesday morning about tariffs and trade wars, and the markets collapsed. And amazingly enough, the markets rallied all the way back up, and actually had the biggest one-day turnaround in history to the upside. And of course, all the ag products were bought up on Wednesday morning, and they closed near their highs. And again, we had a repeat on Thursday night into Friday, and of course, it all worked out once again, and we saw prices that move their way back up. And again, I go back into the discussion as to, is it a big deal? Is this a smoot hawley? Are the people making too big of a deal out of this whole thing? And my guess is that we are. I think the first thing you have to look at is Larry Kudlow taking the job as an appointment to President Trump. I don't believe that Larry Kudlow would have taken the job if he felt that there was going to be an actual trade war. Number one. Number two, I think that the overall environment is finally, we have a president that is trying to flex his muscles to say, we're tired of being pushed around. I think this goes back into the lobbyists and the Congress and the Senate and the money that they were taking away from all these lousy deals that they made. I believe that this is going to work out better for everybody when it's all cleaned up. And I think that we're seeing this in the pricing of, for example, grain markets. The grain markets are back to the levels they were before the sell-off of the USDA report. Okay? So again, I think that we're making far too big of a deal about this. But I think if you look at who's making the big deal, it's mostly those who are on the left. Now, again, I'm not a fan of either side, so let's not think that I'm trying to pick on the left, okay? I am a fan of what's going on with our current president, trying to say it's about time we flex our muscle, okay? That's what I'm a fan of. Other than that, from a political standpoint, I don't think any of them are any good. I think that there's too much of the lobbyists involved here, and that's why we have so many bad deals, not because we have everything else. But we'll talk about more of that in my commentary at the end of the show. But in the meantime, I guess the big question, has the Trump bump, the Trump rally, is that ended now? Are we starting to see it? Well, I will say this. I think that the Trump bump ended on January 29th. Okay, now I said all along, I didn't like him out there talking about markets every day anyways, because again, there's going to be some pain at some point or another, and I think we're seeing that. But from a technical standpoint, the market went through the three phases of the market. It finally had what we call the blow off to the upside, and that was January 29th. And we had a call on that and said that should be most likely the top for a while. Now again, I want you to remember that we look at the market from our standpoint, that the markets do go up 8% year over year, so we're not concerned. We know there's going to be a correction, and I think this is just the start. And I think the correction will be very deep before it's all said and done. But in the meantime, if you're hedged or if you can withstand the pressure, nothing to worry about. I do think the Trump bump is over. I think the rally is over. I think that you look to be a seller. I think that is more the sign we're seeing now. We go from different kinds of markets. We go from markets that are buy the dip, and you buy every time it sells off, and then there are sell the rallies. Well, from a shorter term trader perspective, we are in a sell the rally market right now. I don't think there's any question about it. I think when you look at the big scope of the market, we're trending lower. And again, rightfully so. We're overvalued. And we keep getting the same stupid story from the Federal Reserve, from the politicians, and from the pundits. Now, again, I think there's a point in time you have to look at this and say, how dumb are they that they keep wanting to help us invest into something that does not look very good? I just have to ask you the question. You know, I listen to these, I watch these news shows because I'm on the news, so I have to at least know what some of the people are talking about. But it makes me so angry when I listen because I continue to watch and I see the same people recommending that you commit all your assets to the sell-off that we're recommending in 2008, in 2001, and furthermore back in 1987. And I think that every market reaches a peak and then has a little bit of sell-off. Now again, I will say this out loud and in public, the markets will be higher 10 years from now. They'll be probably an average of 8% higher. So I'm not telling you that we're going to zero, that the world is over. I'm not a perma bear. I'm not, you know, a David Stockman or a Harry Dent or any of those other guys that are telling you that the world is coming to an end. I'm telling you that the markets are going to need to sell off. And I think that you're probably looking at, before this is all done, in my opinion, and this is purely my opinion, you're probably looking at 1582 or so in the S&P. Now, I said, what is that? About 35% from here. That's what I see. Now, again, does that make me right? No. But that's what I would be looking for. But the first thing I'd be looking for is for us to test the old lows from February 9th. That would be the first thing. Again, I'm not going to go that far out and say that's where we're going. I got to see one low or one high at a time, and I'm looking for that low to come in. All right. But right now we are on the roller coaster to nowhere. All right. You're getting these. Anytime you get these rip your face off rallies, all right, that is telling you that the markets have peaked. All right. Remember, just go back 8 months ago. The markets were grinding. They were going up. It was torture if you were a trader to watch the market dribble up. Boom, boom, boom. Now you're seeing boom, 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 boom. You're seeing wild swings. Well, why is that? Because the certainty, the complacency is no longer involved in the everyday market. Nobody actually really believes that the markets can only go up anymore. So you see in a market that is turning, or in a bear market, which we're not in yet, but we are in a corrected market, but I do believe we'll go into a bear market. But in a bear market, you have the most vicious rallies that you could ever imagine. And that is the perfect sign to show you that the market is at a top, because you get these vicious rallies that fail at where they're supposed to fail. Like, take a look at the rally that happened on Thursday. It failed right where it should have failed at. And it sold off 700 points on Friday on the jobs number. Now, again, you can take away from the jobs number what do you want. I don't believe in the jobs crap anyways. To me, it's a bunch of manipulated numbers that we're trying to make into something that's really good. I keep hearing about these $2 million or $2 million a year job growth or whatever they want to throw out there. It's all a bunch of garbage, okay? Let's just look at what the real facts are. We are in a wage stagnation, okay, for 40 years, okay? Average hourly wages went up 8 cents an hour. So if you just multiply that out, all right, it comes out to about $150 a year. Really? I went to a baseball game with my son and my wife. It was $300 and some dollars. Before the whole day was over, it was $400. So that 8 cents an hour couldn't even pay for one Brewers game, one baseball game. So again, this is a bunch of crap that they continue to try to spin into it's good. This ties a little bit back into the trade wars and the lack of jobs that we have seen over time. And of course, the inability to have natural, true inflation, where we allow the asset prices, asset classes to price themselves. This has become epidemic. It's not even a total manipulation. Now it's becoming epidemic. Take a look at what's going on around the globe, and you have Japan that is now stepped in and bought even more of their ETFs during March, okay? Now, this is telling you that the economies are in trouble. It's not me trying to convince you that the market, I'm not trying to convince you of anything. I'm trying to convince you to look at a chart. That's all I want you to do. Read the chart, not your opinion. That's what I want you to do. Because when you look at it, you can just see the trajectory is going lower. Now, why does Japan feel compelled to have to come in and buy some more equities? Well, obviously they feel it's a problem. They don't want the market to fall. So when we look at the big picture is ugly in general by itself. We don't have inflation. We don't have asset classes pricing themselves. I mean, if you look, and let's go back to the grain markets for a minute. If you look at the grain markets, other than soybeans, which used to trade at $5, believe it or not, back when I first started and all the way through the 90s. All right. But when you look at corn, if you take out the ethanol value of corn, your corn is trading where it was in 1999. This is 2018. I believe that the prices, the cost of doing business has gone up. Now, I understand that we've gotten technology better and we were able to produce more. But again, I think that the pricing is ridiculous. All right, I think we're way too cheap, which is why I do think that we're going much higher. Wheat is the same thing. There was always a relationship to what they were trading at. And of course, those relationships became skewed occasionally. But there is a direct relationship of what they should be. And right now, they're very underpriced. And it has nothing to do with the trade wars. The grain prices are much higher than they were last summer. We're approaching, not last summer, but we're approaching those July prices of last year. All right, we've got some room to go, but I think we're going to get there. I believe you're going to see some of the money flow out from the equities and come into the grain space. I believe that this whole mess with the tariffs and trade wars is going to actually benefit the American farmer. That's my opinion. I believe that to be correct. I don't see that we're going to stop eating. I don't see that we're going to have some major problems. So I think that this is actually going to be a longer-term benefit. It might be a short-term pain, but again, we're already in short-term pain because many of us are in the ground with less than what we have invested. So again, I think that this can only benefit us longer term. And I think when you look at the bigger picture, I think it's going to work out and take off some of these big tariffs that we have to pay, and it's going to take away some of these quotas. So I think it's actually going to work out better in the long run. Okay, I think that this is just part of the process, and this is part of draining and getting rid of the swamp, which is going to be part of my commentary. But in the moment here, I'm going to step out here for a break. This is Bubba's Bottom Line. I am Todd Bubba Horwitz, and of course, I always thank you for being here, and I want to remind you to check out my high school investing program. Again, we're trying to get into all the high schools we can. We're in 450 right now and trying to get into more, but we have, for 7 years, I finance it, and I'm out of capital for financing that. So if anybody would like to step in and help out, you can go to Patreon, patreon.com/Bubba Trading. In the meantime, don't forget to catch the Bubba Show every day at 4 to 5 Eastern at LibertyTalk.fm. And on Tuesday, we're going to have on the Mooch, Anthony Scaramucci, on the Bubba Show. So make sure you catch that. In the meantime, let's get back to Bubba's Bottom Line. Welcome back to Bubba's Bottom Line. Todd Bubba Horwitz with you. And of course, we're just ripping everything. And again, I really get angry. I am a big champion of the underdog. I'm a big champion of trying to make things better for everybody. And I really get irritated at a lot of things, and I really get more pissed off, which is going to be part of my commentary, but with what goes on in Washington. But in the meantime, something else to piss me off, Mark Zuckerberg, the Facebook deal. Now, I don't really care about the privacy issue. That goes on every single day. Okay, when you sign up for something, you're giving permission to give your information away. Okay, now again, we can talk about data breaches, and I obviously don't like any of that, but you're giving your name. When the minute you sign up for something, all right, you are selling your name. You're not getting anything for it, but they're taking your name and they're selling it. There's a story in business. It's called the value of a list. All right, all of these marketing companies, and Facebook is one of them, know the value of that list. They all sell them together. They all turn it. Did you ever notice? You get on one email list and you get 5,000 emails from everybody else because they sell them. Now, I personally never sell my email list. I don't sell my names because I don't want to sell my names because I just want my people for me. Right? But my point is very simple. When you get on a list in general, everybody markets those. And Facebook was no different because you willingly give your information up to them. Okay? You sign up for something, you're giving your information up. They all do it. It's part of the business. Now, again, I don't like it. I don't agree with it, and of course you can unsubscribe from all those, but that is part of the issue. But what Zuckerberg is doing now is from a business standpoint, is just genius, all right? Which shows how smart he may be. Now, I'm not saying I don't know him, but I do know this, okay? He wants this industry to be regulated. And the reason that he wants this industry to be regulated is because he is already passed all the tests. He's already made all the money. So if he regulates, he puts himself at the top of the heap against everybody else, and it forces anybody new that might want to come in and compete to try to keep up with these regulations. Now, I don't know if you understand how hard it is to keep up with regulations, but many companies have gone broke because of overregulation. That is one of the biggest things in the banking industry. That's why we've got the big, whatever number it is, 7, 8, or 9 banks, and why small banks have so much trouble because of the regulatory bodies. So if Facebook gets regulatory and they get put in regulations, that shuts the door on any small competition. Again, very ingenious when you look at it, because they've already climbed the mountain, right? So they then put the squeeze on others that are beneath them. So again, it becomes a challenge for other social marketing companies. So that is something, in my opinion. Now, we had Fed Chair Powell speak on Friday, talking about growth has picked up. I got to ask you, okay, and maybe I'm wrong. And again, I love to hear comments, and people email me all the time, and it's Bubba at BubbaTrading.com. But where's the growth? Can somebody please clue me in? Because I haven't seen the growth yet. I'd like to know where this growth has come from. And I just want you to understand the cockeyed way that they calculate GDP to begin with is not the correct way to calculate it, number one. And it does never show true growth. Because if we're just eating out at more restaurants, that's also part of the GDP. But we're producing nothing, okay? And we're not creating jobs. So where is it that we are seeing all this terrific growth that I continue to hear about every single day? I haven't seen it yet. I would love to see it. I'm all for it. Believe me, I'm an American. I want America to be great again. And I do believe that the right guy is in the office trying to do so. But I don't believe that the rest of the world wants to help. And I think, again, that's more part of my commentary. I'm building up a big thing here. But when you look at some of the things that are going on, look at the price of oil. Now, everybody kept saying oil is going to the moon, going to the moon, going to the moon. And I kept saying, I don't know, I don't think it can get much past 66. I think it's going a lot lower. And I do believe that. I think oil is going a lot lower. I think that, we've got a way oversupply. I think that you're now starting to see that the frackers and producers here are willing to take $60 a barrel, 65, whatever it is, and continue to flood the system. I think that we can now see that we don't need Saudi Arabia. We don't need OPEC. We are not held at bay by those folks anymore. So I think you're going to see, I honestly believe, and listen, this is not soon, I'm not making this prediction. Do not act off of this prediction, but I expect to see oil again someday under $20 a barrel. Okay, someday. Because again, if we do not develop a better way to catch resources with everything else we have, then obviously that would be just ignorance. Because if the fossil fuels is really killing the environment, and I don't know, I'm not an environmentalist, but if that is it, and we're still not somewhere else in years from now, then that would be another problem to think about. But I do think that the price of commodities are going to start to rise. I think that you're starting to see a lot of reasons why they should start to rise. And the biggest reason will be, obviously, in my opinion, the sell-off in the equity markets. I think when the equity markets start to break, that will bring money to alternatives. I think when you look at it, I think silver is a great value in here. I think gold is still kind of choppy. And I think that's another issue we look at. The value of gold to silver is way too high, the ratio. So I think silver is a great buy. I think gold, it might be a buy silver, sell gold type of trade. I think the Bitcoin or the cryptocurrency world has got some issues, but I think they're going to make a dramatic recovery. I think if you actually look at a chart of Bitcoin, you will see almost a mirror image of the chart of the Dow Industrials. Now, I think part of the reason you're seeing a lot of selling is part of the regulatory bodies trying to get involved in the tax issue. Everybody seems to forget of the disasters that happened in the 90s, and into the 201 crash and into the '08 crash. And the disasters were very simple. Not that the market sold off, not what happened, but what happens is, people were churning and making so much money, right? And of course, you have to pay taxes on all that money. And then all of a sudden, bang, the market drops, you're stuck, you have crossed over from one year to the next, and you've got a huge profit that you've got to pay taxes on, and you've got a huge loss that you've lost all the cash that you were supposed to pay the taxes with, and you get a problem. Right? And I think that's what happened with Bitcoin. I think that we saw this, I think a lot of this has to do more with tax issues, that taxes have to be paid because of a lot of the money that was made here and some of the taxes that have to be paid. So I think we'll start to see that work itself out in a much better way as well going forward. I think there's a lot of things going on underneath the surface of the market. I do believe that the cryptocurrency world is real. Now, again, it's hard to say which one's going to be real, which one are we going to want to be in. Right now, from a stability standpoint, it would probably be Ripple because that's used and that is recognized and it's actually taking place of the SWIFT system and wiring money. And just think about that for money. If you've ever wired money, it's a pain in the butt to have to wire money through a bank. You got to go there, you got to sign, it takes forever. Whereas, right now you can, with Ripple or something else, you can do it instantaneously. So, but I do think that, again, you're seeing some of the smaller countries start to adapt or adopt cryptocurrencies as their currency. So I think they're going to be real. I think there's just a way that you got to look to trade it like anything else. And I would never take and put too much money into any one class, but certainly 3 to 4% or 5% is certainly a reasonable task to take advantage. But when you look at the overall markets, the markets look to me like they're in a lot of trouble. The entire system looks like it's melting down. Now again, this is natural, and I do not want anybody to be feared or go out and sell everything because I'm saying that I think the markets are in trouble. I thought the markets were in trouble for quite a while. And I think that what you're going to see is as soon as the 10 years start to get back near 3%, I think you're going to start to see a lot more money come out. I think what you have here today is a lot more people that want to be out of the market than are in the market, but because they don't get enough return, they have to be forced in. But I think as you see more meltdowns and more troubles, I think you're going to see this market melt down and the money move away from there. Okay. Now again, if you're an investor, don't panic. The markets will come back. You should be hedged, but if you're not, don't worry about it. Don't try to rotate around. Don't try to figure it out. Hold what you got if they're good companies and let it work. Do not let yourself get trapped into the typical BS in which we are spewed and been ingrained in our minds. We got to move from this asset class to this asset class because the markets are moving, risk on, risk up. If you've got good, solid companies that you expect that will be in business 10 years from now, stay with what you got. That's my opinion. That's how I see it. That's how I look to trade it. But in the meantime, there are a lot of issues out there, and we're going to see, I think, a pretty good major meltdown here. Again, I'm expecting in the next 12 months a 30 to 40% haircut in the market. But that does not mean there will not be vicious rallies to the upside. There'll be opportunities on both sides, and there'll be buying opportunities. Last example is Amazon. November of 2008, the stock was trading at 30 bucks. Now it's trading at 1,400. So again, it's not something that we have to worry about today. You find value of a good company, you buy that value, or you learn how to get hedged. And we are starting a new hedging class next week, so if you're interested, check us out. In the meantime, we're going to step out here for a break. This is Bubba's Bottom Line, Todd Bubba Horwitz. And I want to remind you, first of all, check in on Tuesday at the Bubba Show, 4 to 5 Eastern Time at libertytalk.fm. I got the Mooch coming on, Anthony Scaramucci, who's going to be my guest, and we're going to spend the day together and talk about all kinds of good stuff. So make sure you check out that on Tuesday, 4 to 5 Eastern at libertytalk.fm. And if you'd like to help out our high school program, please feel free to do so at Patreon, patreon.com/Bubba Trading. We're trying to help educate America because we would like to see that these issues we see today go away, and not because of ignorance, but because we've actually got people who understand how the markets work. In the meantime, welcome back to Bubba's Bottom Line, and it's time for my commentary. And aren't you happy you stuck around for this? All right, I mean, I've got so many components to tie in here together, but let's see if I can pull off the triple Lindy here. And So we talked a little bit about the trade wars. We opened the show about the trade wars. Now, again, I am not an economist, but I know one thing. I give economists no credibility. Anybody who can't tell me something today that's happening and has to wait 10 years to see how it plays out is no bargain to me. So I give no credence or credibility to them. I think they're absolutely just, figureheads that try to work off theory, which never works. Right? So I think the biggest problem here in the trade wars, and the reason that we're in this mess that we see today, is because we've got too many lobbyists and we have too many Congress and senators that are more interested about their own personal selves and about their money than doing what their actual job is supposed to be. Okay? Again, all these bad deals were made for a reason. They didn't have to be bad deals to begin with. But for us to be at a trade deficit because of, look at the lobbyists. Look at who's crying the loudest right now. Look at the companies that are crying the loudest. They're the ones that have all the big lobbyists that get paid off big money and pay off who they have to pay off to get these lousy deals in place. Now, again, America is a great country, but we should have never given up all of these jobs. And everybody says, wouldn't you be willing to pay more if we had to, make it all in America? And the answer is we probably wouldn't have to pay that much more. Everybody talks about these tariffs as a tax. Well, maybe we could get people to go back to work. Remember, the reason that goods and services got so expensive is because the process of manufacturing it, because of how we started to pay wages and how we started to pay benefits, became out of line, not the actual salaries. So now that now that we're in that position where we can rebuild from the beginning, so we're not paying people $150 an hour all in with benefits and retirement and all that, but you can build a new process. I don't know that these goods will be that much more expensive, okay? Now that we have the technology to do things, I don't think the goods are going to go down in value. I think that we can actually bring back some good jobs and shouldn't be beholden to everybody out there just because they supposedly have cheap labor. When you manufacture something there, for example, for let's say $10, by the time you get it here, it's $20 with all the tariffs and taxes and duties that you have to come across, where we could manufacture the same thing here for $22, what really is it going to do to the price? So again, I'm not quite so sure that we're not being hoodwinked as we have been many times before at what the actual cost is going to be. I happen to know for a fact that if you took an iPhone and assembled it in this country, it would only add about $40 to the iPhone. Now, forget about the $40 because right now, who pays the phone for most of the phones anyways? Most of the phones get paid for by the companies because they want you to be on there in that service. They want that monthly fee. They don't care about the price of the phone. So I think that you could see a lot difference if we got rid of the lobbyists, if we got rid of the phony congressmen and got rid of the senators, because those are the ones that are squawking the most about how this works. Now, I'm telling you, this 8 cents an hour for jobs is a joke. And that is what we're trying to be, that's the bill of goods we're trying to be sold at how good the jobs are. All right. Now, again, this is all due back into the same package, which is why I'm putting it in here. With the lobbyists and the government and the swamp, they have sold us down the river. Okay? They have sold us down the river. You can look at it any way you want. But your kids, your great-grandchildren, and their great-grandchildren will be paying this debt that's being created by these idiots forever. So it's about time that somebody stood up and said, hey, enough is enough. Let's see if we can get somewhat fiscally responsible and cut back on all this debt. Now, again, you can like what you see, but if you go back and look at yourself, look at your own personal life, and you go look at what you were making in 1990, and you look at what you're making in 2018, and you tell me if you were living better then or you're living better now. So yeah, you may be making more money dollar amount wise, but it doesn't go as far. And the answer is no, because we've got too much manipulation between the idiots at the Federal Reserve, the idiot economists, and the crooks in Washington, and the lobbyists that take all the money. So you tell me when was a better time for the average American, and I would tell you that the better time was 30 years ago from a money standpoint, because you didn't need to make as money. Now you have you come nowhere near to matching what the big companies have made through their phony deals, through all the other crap that has gone on throughout that. So you think about that, and you let me know what you think. This has been Bubba's Bottom Line. Everybody have a great weekend. Thank you so much for being here, and we'll see you back here on Monday for Bubba's Daily Update. Have a great weekend, everybody. Thank you so much, and we'll see you later.